When you're above potential and you have this deficit, and we'll drop a chart in here so this makes more sense. But if you're running above potential and you have this high deficit, what's going to happen is you're just overheating the economy, and this will bleed into inflation at some point. So the Fed is being much more restrictive than they would normally have to be in an environment, right? Because they have to compensate for the excess deficit that's pushing the economy into overheating stage, and therefore they have to remain tighter, higher, and longer than a lot of people expect. Now, I think that as of right now, your question, what if the Fed doesn't do anything? Nothing happens. If the deficit, excuse me, nothing happens to the deficit, nothing happens, and the Fed would in turn do nothing, nothing happens. Literally, the Fed is giving you projections of the deficit not changing. Therefore, like, the Fed's path is essentially dependent on the deficit and in turn a recession. But the interesting thing about the situation is when you're running a positive output gap like this, recessions don't just come overnight unless they're COVID. Like, they take time to progress, or they're a crisis. So without COVID or a crisis, it's going to be very hard to chew away the economy with so much excess output in the economy. Therefore, it's almost like a catch-22, because unless they adjust the deficit, there likely isn't going to be a severe recession. But the Fed is also going to have to remain high, which is going to put continued pressure on the economy, and in turn can slowly deteriorate that positive output gap over time, give it years into turning into a recession. So it's like a push and pull here. The government can decide to do nothing, walk away from the fiscal problem, lay down their swords, and say, look, there's no recession. I mean, there's no reason for us to cut spending. We'll just grow out of it. No biggie, no problem. And it won't be an issue right now. It's not like the government's going to default on its debt. Yeah, there's a refinancing wall, but term premium's already up 50 to 60 basis points. So the market's already kind of front running that a bit, if you ask me. And they have to refinance all this debt. Obviously, that's the refinancing wall. And then they also have to navigate this whole tax cut thing, which they're trying to do. And how that affects the deficit, we'll find out given what concessions they're willing to make to get that tax cut bill passed. Ultimately, they can do all this, kick the can down the road for a year or two. I don't think anything happens. The government's not going to default at the end of the day, right? U.S. is not going to default.